past 3 o'clock, so let's start the session. Um, I wholeheartedly thank you all for registering for the session and making time out of your schedule and participating in the session. Thanks for once again. Thanks for joining. So, a brief about us. Many of you are aware about us. Uh, Anveshan is a consulting company. It's an offshoot of a CA firm by name Suresh & Co. Suresh & Co has been in practice for the last 57 years, and we are a financial and regulatory solutions provider. Of course, we believe in, challenges may come from anywhere, but solutions come from Anveshan. Either from us or through us is where we believe in. Quickly about our areas of expertise. We advise on corporate structuring and restructuring, tax-related advisory, fundraising and mergers and acquisitions, transaction support services, due diligences, valuations, startup support, and business succession and estate planning, which is the focus area of today's session, long-term compensation plans, financial modeling, and support in case of arbitration. So today, I have pleasure in mentioning that we have Mr. Ram Mohan, who is a chartered accountant and an MBA from IIM Calcutta. He is an expert on estate planning matters. He has 40 years of corporate experience. He's been part of large MNCs, both Indian and overseas, likes of Apollo Tires, United India Insurance, Hindustan Lever, and many other. And his last stint was for 20 plus years in GMR Group. And before he exited, he was group president. He has been chaired in several boards and audit committees. He's got experience in corporate finance and strategic planning. And at present, his focus is on supporting and helping family businesses and advising them on how the succession can happen, what sort of things to be put in place on continuity, and of course, family constitution, designing family constitution and implementing it. So, Mr. Ramon, sir, thank you for taking time out of your schedule and then participating. Um, if you want to share a few words about it.
Thank you, Arun. Thank you for inviting me to be on this panel. Uh, As Arun has already introduced me, over 45 years of experience in the industry in several areas, mainly risk management, audit, uh, business structuring, planning. And one of the major areas where I was involved in the GMR group was in their family constitution preparation. It was a very enlightening and enriching experience. I was part of that journey of the GMR group, and I would like to share some of my experiences from there with you all as we go along in this webinar. Thank you.
Thank you, sir. So, friends, as Mr. Ramon sir mentioned, we'll be calling upon calling upon him for his expert comments, as and when we have identified several places, and of course, during the Q&A session, we will be answering based on the questions raised, and certain hygiene matters. We will be recording this session and we'll be uploading this as well onto our YouTube channel. And for all our attendees and registrants, we'll be sharing this presentation for your reference, for future reference. And hence, we request any of you not to record this session. Yeah, moving ahead. So the session is a second part of the session with respect to estate planning 360-degree, where in the previous session where we had in the month of August, we had covered estate planning with respect to personal assets and few of the personal aspects where we spoke about the importance of will, practical challenges in will, understanding succession laws, because succession laws are different, slightly different for Hindus and other communities. And of course, within these laws, there are complications. It is not straightforward. We dealt upon those aspects. Of course, what are the steps to be taken with respect to drafting a will and executing a will? We also spoke about discussed about importance of nominees, having nominees, and we touched upon private trusts and its benefits over will. And apart from that, we also spoke about certain structures that we can bring in within the private trust with respect to waterfall mechanisms and what are the approaches that we will have to have with respect to registering a um, trust, private trust. So these aspects were touched upon in the previous session, and it was mostly with respect to the assets held privately or individually. So, as I mentioned earlier, today's session will be more focused on the business assets and corporate entities where families own and run and manage the businesses. It can be either in different forms. It can be partnership, it can be proprietary concerns, or it can be a private limited company. But end of the day, these business assets form part of the estate, and hence, with respect to the developments and handing over to the next generation, the way that we plan for personal assets or individual assets, similar planning is also necessary for business assets also, not just from handing over to the next generation, but also the continuity aspect and existence or continuity of these businesses over generations. From those perspectives, also, business succession planning is all the more important. So, moving ahead, of course, before we move ahead, just want to mention here. Uh, we have been working on these estate planning aspects, both from individual and private assets perspective, as well as business entities perspective. And whatever we are discussing today and sharing today in this webinar is culmination of all the expertise that we have gained over a period of time. Having said that, nevertheless, each of these cases that we have handled in the past is very unique in itself, and every case is helps us in learning something new. So with every matter, every family aspects, we keep learning. So our at our end also, it's a continuous learning process. So let's see today in the Q&A session. Of course, we may come across something new and different also. Moving ahead, we need to be clear on why business succession and why there is a planning required, and when the planning is all the more required. So some of the key aspects that we could identify as to answer this question was the succession planning. As a resultant, it ensures continuity of business operations. Means it provides a visibility beyond the promoters, existing promoters, the current generation who are running the businesses. It also helps in preserving family legacies and values that the promoters or the first generation or the current generation have put forth and made as part of the business activities. So the legacies and values has to be continued. That is where each of these family run businesses stand out unique as an unique and different entity and organization. Having said that, it's all the more important where the control and ownership uh, needs to be identified. Generally, the family-run businesses, we have observed that control and ownership remains with the same person or same group of people. Not necessary that it has to be the same in every situation or every point in time. It can always be delinked. The reason is what is best needed for the business is always to be implemented by the promoters. Having said that, if current generation or the next generation is capable of running the business and expanding the business in a better way, the control has to be handed over to them. At the same time, ownership can be decided in a different way. Having said that, control and ownership can be delinked using business succession plannings. Next, we have observed there are a lot of assets that personal in nature or non-business in nature being locked within the business entities for various reasons. That being the case, we always observe and understand that though the intent was to create the personal assets in their personal names, the families always go ahead and create these assets for whatever reasons it is. Like, for example, to overcome tax incidences, or because there were leverages to be undertaken with respect to the funding for the business, these assets got locked within the business entities. So, moving forward, when there are opportunities for liquidation or exits or inviting investors, or even when different the second or third generation families, there are three or four families involved, when the segregation has to happen with respect to the control and the ownership, these assets has to be moved out. So as part of succession planning, this is also another key aspect, that segregation between personal assets and business entities have to be undertaken. Next, it brings in clarity amongst family members. Generally, I have observed, and even in my friends groups, we observe that certain family which runs businesses, they all control the business as one group, and there may be third or fourth generation also working in the same business, but they really do not know what they are working for or what they are getting into. So that being the case, this family succession planning or the resultant of succession planning provides clarity amongst family members as to what they get, what they are into, and that the clarity helps in better involvement and better results as an outcome of that involvement. Next, it identifies and prepares future leaders. This is all the more important. The continuity and the cross-generational existence of the business requires identification of future leaders well in advance. Hence, succession planning is not just one-time activity, it is a continuous process. So, these are some of the key aspects as to why business succession planning is also all the more important. Here, I would call upon Mr. Ram Mohan to share his view on these practical view, especially on the succession planning. Also, sir, please share what is the right time to start thinking about this.
Well, the time to start your planning is today, if you have not already started on it. Taking cue from how the GMR group went about it, GM Rao started the business planning, succession planning, right practically the time he started his venture itself. Right from the beginning, when he entered into the infrastructure business, this is, I'm talking of the late 90s, 95, 97, when he had just entered into the uh, infrastructure sector. Right from that time, parallelly, he kept in mind the succession planning and he went about it in a very organized way. The planning, not only of the business, the entire family succession, everything was taken and done over a long period of time. In fact, as you might be aware, GMR Group has made out a family constitution, a signed family constitution, signed by all the current family members. That particular constitution that took over 10 exercises, which was done involving the entire family. Family members met, discussed, debated each and every issue, and that is how they came to that right. They took the help of experts, both international and domestic experts were involved in it. They took the backdrop of other family groups. Murugappa group was one of the ideals who were looked upon, and adapted. Their procedures were also considered. Same way, so it was a long drawn process, very meticulously planned and executed. So it is the vision of the promoter. He has to decide on what he wants for the future. And based on that, get the involvement of all the family members and slowly build it up. So, as I said, start today if you already haven't done so.
Thank you, sir. Thanks for
Yes, sir.
your insights. And moving ahead, so these are again our observations. It may not be true for every family which runs businesses, but in many of the situations we have observed, um, this we call it as succession gap. Why we call it as succession gap is because of these aspects, the clarity and the continuity amongst the family members are not present, and hence this creates a gap in terms of succession, especially on the business side of it. So some of these to call out as the promoters or the current generation delays initiating the planning. The delay may be for multiple reasons. It can be emotional aspects, or even they feel that this is not the right time. We will look at it in future. Their gut feeling or the hunch that they have, that they are strong enough to take care of the businesses for some more time. These are the different reasons that the delay happens, for example. And at the same time, there may be lack of awareness as with respect to the legal tools that are available today as part of our legal system. So the tools that we have mentioned here are like wills, family trusts, holding companies, special purpose vehicles. These are some of the tools that can be used, and of course the documentation side of it, like family settlement, which we will talk about those aspects in as this in the session going forward. Next is the thought process is the any kind of family settlement or business succession or a reorganization uh, is wrongly interpreted as a tax inefficiency, or there may be regulatory overlook aspects also. So from those perspectives, there is a gap that gets created with respect to the succession. At the same time, with whatever culture that we come up from, and whatever situation we are in as part of our uh, um, current religion or etc., people do not or hesitate to talk about any kind of succession because it is treated as bad omen. Some of the families and some of the religions feels that. So the emotional and the cultural barriers that we come from, I mean, we have, people do not want to talk about, handing over the control, distribution, etc. And they don't, many a times we have observed they don't even, execute a will. So these are some of the myths, I would say, which again delays the succession planning being implemented. And there is no proper grooming or no clarity for the next generation roles. Again, because of which it creates a gap. And of course, lastly, the emotional ownership or strategic planning that takes over. Emotions take over the planning objectively, and hence it creates a gap. So this is not necessary that is present in every family per se, but often we have observed this. Hence, it is all the more important for us to create awareness amongst the family who runs the business groups or business entities, to influence or even to recommend them that succession planning is a must. Either it is today or tomorrow, it is a must, and they have to go through this process for whatever reasons that we discussed in previously in the previous slides. Moving ahead, some of the large businesses which went through the kind of reorganization or settlement or succession planning, we have just named a few, but if we look around, there are multiple families, multiple businesses which have gone through this process. For example, Walmart, they went through this planning with respect to the control. They retained the control via trusts and holding companies, while they appointed professionals to manage the operations, business operations. Similarly, BMW also went through similar activities. Reliance Group, we all are aware of, and we know it is what all that happened in the year 2005, and how um, the family came out of the situation, and then they settled the matters between two brothers. So I would again call upon Mr. Ramon to talk about how GMR has implemented or taken up this activity and looked at it. Over to you, sir.
Yeah, the, the GMR group, the philosophy that is being followed or that is kept in mind is consolidation. The whole family, which is running the business, today it is the first generation and the second generation, and all of them are involved in the business. Their philosophy is to run it together. Each business might be a different entity on its own, but the whole thing is grouped under a holding company. So the structure is the GMR Holdings, and all the individual companies would come as subsidiaries to the GMR Holding. And the holding of the shareholding of the GMR Group is what is controlled by the family through trusts. So there are trusts which have been created which control the shareholding of the GMR holding, and each and every company is below that. So individual family member, though he would be involved in the business, the economic benefit would be derived through the holding structure and the trust above that. So that is how the whole thing is continuing. And they have strict rules of how they will conduct themselves within the family, within the business. And the philosophy again is that the economic benefit is distinguished from the right to manage. What Mr. J.M. Rao feels is that anybody born into the family, into the group, is automatically entitled to a share of the wealth of the business, but at the same time does not get the right to manage the business. Managing the business would have to be earned. The right to manage the business would have to be earned. The capabilities would have to be proved. Only then the person would be allowed or be possible for the individual to enter into the management. And that position would have to be worked upwards, especially going forward. That is how it would be totally for the future generations. But the fact that the individual is a part of the family would entitle the individual to a share of the wealth. That has been ensured through the trust structure.
Thank you, sir, for going deep into the nitty-gritties of how GMR family adopted family succession and what are the key areas or key aspects. But of course, I believe each of these cases in itself is worth a session or two. And of course, we will not dwell into and will not get into deciphering these nuances of each these cases, which we will park it for some other day. And moving ahead, so now that we have understood uh, why succession planning is important, let's also understand a little bit more on what are the means or the tools that we can implement or use for achieving the planning, or at least coming across finalizing the succession planning. So, of course, when there are multiple companies within the group, cross holdings, different types of entities, etc., are there, and there are multiple family units or smaller family units within the larger family. In that situation, in those situations, corporate restructuring or business restructuring is all the more important. So, one of the key aspects that we have always observed is, uh, though the families discuss and decide and agree upon certain way or manner in which the succession has to happen, as a follow-on activity or the next action, call for action would be the segregation of businesses within the families. So, from that perspective, some of the key restructuring aspects would be mergers, demergers, asset transfers, slum sale, etc. So, that is one aspect. The other aspect is uh, um, family constitution. Family constitution is important, as Mr. Ramon mentioned just now, how it it was implemented in the GMR family. I'll not touch upon again, but some of the nuances is like it should capture the family's vision, values that needs to be adopted and continue to be followed, uh, the governance aspects, the leadership qualities, and of course the philanthropy side of it also gets captured in the family constitution. Next, the family arrangements. This is the foundation for any kind of call to action with respect to the succession planning. It has all the action items that gets captured either in the past or to do in the future, and everyone uh, you know go through it, agree upon, and then sign off as a document. That's family arrangement. As part of this activity, identification of next generation who acts as leaders of business leaders. This is all the more important. This is again, as I mentioned, is not a one-time activity, but it's a continuous process. You have to identify the next leaders. It can be homegrown or external talent that you bring in, and they have to be put through certain process so that they are ready to take over the business activities into in the future. So these are some of the means which we will dwell on these little more in detail in the coming slides. So here I would call upon my colleague Maithili to talk about some of these aspects starting from this slide. Maithili, over to you.
Thank you so much, Arun. So, we have so far discussed the reasons for why we need to have a business succession planning. One of the main documents which works as a starting point for enabling succession planning and a clear roadmap which enables devolution of property back into the next generation is the family arrangement. Now, what is a family arrangement? Family arrangement is sort of a charter which brings everybody onto the table for discussion and enables conversation within the family and creates clarity for all the stakeholders as to what it entails for them and how the division and how the succession is going to be carried out in future. Arun, can you move or now? This is one sort of a common structure that we have. In the process of creating multiple businesses, when there are larger parties involved, what happens is we have multiple companies which is required for multiple businesses purposes, and the family also increases. As a result of which, commonly we see a cap table which is a little crowded, where you have all stakeholders in the family as part of the cap table. Now, this would work as long as a single promoter or a single person is in charge and they provide a methodology for how the business and legacy has to be carried forward. But when there is a requirement for the next generation to take over, it it is very imperative that the division of ownership control and more clarity that some of the stakeholders will have absolute control over the business needs to be created. Now, some of the things that we discussed as part of the presentation previously is also that over a period of time, there are some assets which are locked under business enterprises, which are of over a period has grown in value, but is not very essential for the operating business. But the value can be unlocked in other means where it is commercially more viable for any sort of a development. And those kind of assets also needs to be untangled and enabled such that all the family members are enjoying the benefits from it. Now, how does a promoter with the entire family create that sort of clarity and create a mechanism whereby each of them can take control of the businesses? Now, we saw previously on the other slide as to the sort of a clutter that was there. If you had to completely clean up and create a roadmap, at the end of it, what we would want to create is this sort of clarity where each of them pick a particular business and they have complete control over operation of that business. And any sort of wealth that has been created in the process over a period is available for the entire family. That gets parked for everybody to untangle. Now, if I have to do it in an Excel, it is a very simple job. I just need to move it and then arrange it. But in reality, for an ideal structure to be achieved, it is not a day's job where you get that structure on paper. But unless you have it on paper, you cannot visualize it, nor can you create the required structure in future. So it all starts with the business family arrangement, where this intent of decluttering and creating clear succession goals and the entire carving of who gets what and how the settlement has to happen is to be documented. Now, what is a family arrangement? A family arrangement is nothing but a clear understanding where all the parties who are party to this family sign up saying that they are aware that this is how the division or this is how the succession has to happen. It can be having a prelude of a dispute, can be a prelude to the family arrangement, not necessarily. But the main goal of a family arrangement is to ensure that there is peace and harmony in the family and the family stays together. And there is a clear objective for all the stakeholders in terms of what they are going to inherit and how they are going to take it forward and what is the legacy that's going to descend on them. Now, moving forward, so what would the family arrangement aim to achieve is that it has to be an equitable distribution of the property, not necessarily an equal distribution of property. It creates and it brings clarity and it needs to be necessarily written. Why we insist on, though there are judicial proceedings where they say even an oral agreement would suffice, having it in writing means all the family members have understood what they are signing up for. And there is a certain amount of commitment that it creates for everybody, and also a sort of clarity that it creates for all the stakeholders. Now, one of the important thing is that there has to be a clear defining, they should all have clear title to to the particular property. And just like how you have the concept of will, where a will which has been executed based on coercion is not valid. Here also it has to be a voluntary requirement and it should not have any precedence of fraud or any sort of force. Now, this sort of an equitable arrangement should be in good faith and it would be binding on all family members. The important part of the aspect is that it has to be written and it also has to be registered so that and everybody signs on to it, and it will be multi-generational in some cases as well, as long as somebody is a major also need to sign on to it because they are also aware of their rights and what is being decided upon by the patriarch or matriarch. Moving forward, So we have a poll question. If all of you can just enable answering of the poll question, it will be much appreciated.
We'll pause for a moment so that everyone can answer the poll. Yeah, it's good.
Now we understand that we need to start, the entire conversation needs to start with getting the family arrangement in place. So how do we go about and approach having this family arrangement in place? I don't know if you can move forward. Okay. Now, as we understand, it can be a smaller subset or it can be a larger set, but there is a certain family dynamics is involved where you need to identify who are the people who will have to be identified as successors, each of the children, their family, what they are going to get, and that conversation has to happen at a table where everybody is on board with regard to the intent. Now, after that, what it entails is that we need to have a clear idea as to what are the assets that is involved as part of the succession planning. All the holdings that are there, all the personal assets which are there, to ensure that there is a clear and equitable distribution among all concerned. So you need to necessarily take stock of all the assets that are available there. Now, next would entail, one is taking stock of assets. Then we need to have a strategic view with respect to the businesses. Now, businesses, it's very important to ensure continuity, and succession brings about clarity to who is going to take over what asset. As we had shown in the previous one where we had have a holding, if the cap table has all the family stakeholders, and because of which a person who is actually running that particular company does not have operational control, it actually defeats the whole succession planning. The idea is to create a mechanism whereby you have absolute control over operation, even though you can make money for the entire family. So that is one of our critical aspects in terms of clearing the cap table for enabling operational ease. Now, commonly we also come across, for whatever the reason, over a period when the enterprise has created multiple corporates, there are always cases of cross holdings. Now, if there are cases of cross holdings, necessarily what is required would be to clear and untangle those cross holdings to ensure that the holding structures are clean. This also enables to ensure that the wealth distribution is also equitable and it doesn't result in a what do you call, a circular reference which happens because of your cross holding. Now, the whole aspect of, we have taken stock and we have decided what businesses, what we needs to be done. The next aspect is to have the valuations in place so that everybody understand that this is the value that they have created so far, and based on that valuation, there is an equitable split. Now, those kind of valuation discussions will all has to be very transparent, and it has to be necessarily undertaken at that point in time when a family arrangement is considered, so that everybody knows what is the value that each of them is taking over, and there is no any sort of intent where they feel that they have been shortchanged. So these we identified as the common aspects that we need to consider when we set out to do the um, family succession planning and the family arrangement for it. So this is our view. Mr. Ramohan, if you can share, what are the common challenges that you had seen as part of being an advisor to a group?
Yeah, Maithili, thanks. See, the general point that we need to note here is that we can classify the assets into three distinct groups. One is the business asset, which is part of the ongoing businesses which are running. The second is the common other assets of the group. And third would be the individual's personal assets. Over a period of time, each individual would have built up personal assets. Now, uh, by usage, these personal assets could have been construed as part of the family assets, and therefore there could be claim on these assets also. But that clear distinction needs to be done. Further, what we need to keep in mind is we are not just talking about the current assets. It's not arrangement for taking care of whatever is there on hand. We are looking at an arrangement which would take care of the way in which the future assets would be built and how that would be also distributed. One significant point which I would like to clear is that uh, a trust was created, which is called as the a family fund trust, which the purpose of that was to take care of common expenses like emergencies, family emergencies, which could come up, health emergencies, uh, educational needs, because the each family branch might not be economically same. There might be differences in that. So in order to subsidize or help children from those part of the years one, to help them with their education, etc., a separate fund was created, which and the mechanism of how that fund would be financed is also put in place. So this would ensure to a great extent an equitable distribution going forward also. So basically, these are the challenges which we could come across. The personal assets getting mixed up with the family asset.
Thank you, sir. Moving forward. Now, we have, as Mr. Ramohan mentioned, the requirement of non-business assets forming part is also one of the critical aspects, along with the cross holdings. Now, often when we have the conversation with regard to how the family arrangement needs to go about, one of the main areas we have seen as a conversation point is the valuation. Now, if we have to move assets from entities or move assets from family members, when I say family, it is not necessarily only a smaller family. Most cases, sometimes it would involve second and third generation as well, where the set is actually quite bigger. That would result in a lot of tax leakages that would happen. And moment when you want to delink these assets from the existing operating businesses, there also we would also come across a situation where there are tax leakages. Now, these are often the complexities that we have to do, because though the intent of the family is to achieve a harmony and clear ensure that the family stays together, the regulatory aspects and regulatory challenges are part of the entire structure restructuring exercise. So we need to keep track of all these aspects also when we do the family arrangement. Now, what are the key aspects? What is a family arrangement? We have talked about what are the different aspects of family arrangement, why you need, what are the sort of conversations that you need to have as part of creating a family arrangement. So when you have a family arrangement, what would it call out? So we try to address some of the key aspects what a family arrangement would contain. It would contain the intent of the promoter as to have a clear narrative as to the why the family arrangement is happening. It would identify all, take stock of all the assets, the business, and all the intent of each of the business, how it is going to be taken care of, who is going to take care of it in future. And it would have the description of all movable assets, immobile properties. Then one of the important aspects that is to be captured as part of a family arrangement is the pre and the post cap table. Like we spoke about earlier slide, what is the current structure now, and what is the intent of what is going to be achieved in future. So both aspects will have to be captured as part of a family arrangement. Now, when there is a redistribution of wealth across the family, there always comes about the required concept of gift deeds that needs to be put in place. There will also be settlement deeds, because not everything can be gifted. There would be, it would also require some cases where there might be a requirement for a settlement deed, where not a full consideration, but some amount of consideration is required to be paid. Then you would also have a requirement as to what are the future responsibilities and how the members will have to conduct each other. Now, as any agreement, you will also have a dispute resolution mechanism that has to be laid out. What happens if somebody has any issues with the arrangement, somebody goes back on the word, what happens, how does it get clarified? One of the main aspects, or an important aspect that has to be addressed as part of a family arrangement, is as to with regard to the brand, the usage of the brand, who owns the particular brand, who can how the rest of the other entities are going to use the brand. Is there any payment that needs to be done? Is the brand part of a larger group, or is it to one particular person the brand is going to be vested in? And also have a clear conversation on the non-compete that is required to be executed. Now, there would be a space where even though each child would probably take up a particular business enterprise, what happens if they happen to decide to take over an enterprise which another child is doing, or their sibling is managing? So you need to have a clear conversation of non-compete, so that it doesn't throw up any sort of a misunderstanding in future. So a clear non-compete should also be drawn out, and it should be part of the family arrangement. Now, we've tried to sort of populate a mini version of what is the do's and what are the don'ts with respect to the family arrangement. Now, I don't know if we can move forward. Yeah. Um, so one of the important requirement is the intent should always to have the family hold together. You need to have it as a registered document and pay the appropriate fee. That is quite critical. And the documentation should have a complete narrative, because the family arrangement can be used as a document for subsequent conversation with any of the regulators. So it has a lot of weightage, and it is a doc, because what is settled as part of a family arrangement is not an inadequate consideration. It is actually an adequate consideration. Hence, it is important to capture the narrative and document everything, so that in future, if there are questions with regard to consideration at future because of tax authorities being involved, this can be addressed. Now, there is an added complexity of corporates and LLPs being part of these kind of conversations. But the conversation with regard to a family arrangement will be only amongst members or individuals. You cannot have a company or an LLP as part of the family arrangement. This has also been upheld by the courts in multiple decisions, where they've said you can't have companies as and corporates as part of a family arrangement. So you can't have a company saying that they will transfer something as a gift. The whole concept has been abolished with the previous amendment. So those aspects will have to be considered. That's where the requirement of restructuring comes into place. And you need to have, it cannot be a tax saving mechanism, but nevertheless, the whole mechanism of family arrangement itself is a good document with regard to proving yourself against any of the regulatory authorities. Now, one of the aspects that we had talked about in as part of the family arrangement is the inventory of assets and the alignment of the value. Now, inventory of assets, as we know, we need, even if it is a requirement of succession planning like a will, or any trust you want to create and you want to move something, you need to have an inventory of what goes where and who is going to be the owner of it. Another aspect is the value. Now, how do you determine the value, and why value is very significant with respect to um, a significant conversation with respect to family arrangement? We will just have a brief look at it. Now, if we see this illustration, a family typically has Mr. X, A and B children, and then you have the next generation also coming up. Now, if you observe it, there are a couple of people who manage leadership, who are actively in it, and there are also people who are passive in the sense they just enjoy the economic benefits of it. And there are also children who are coming up, and we don't know whether they're going to take over the business or not. Now, the important aspect is that across all these levels, it has to be ensured in such a manner that the family of Mr. A and Mr. B will have to be in such a manner that at least it has to be an equitable split, such a way that both the families are enriched and there is not one family is not losing at the cost of the other. That's what the promoter would ideally want to look at. In the current scenario, if you have to look at the asset distribution for that, for the family, Mr. A and what they hold, you will have the list of all the properties that they hold in their personal name as well as part of a group where they have a certain interest. So this would come up to a certain number and we need to necessarily determine what is the current value of the family as a whole. And you would have the family B and you have to take stock of their assets as well to see what is the delta that is available with respect to them. Now, these are assets that you need to capture, which is on their individual names. And apart from that, you will also have multiple businesses where each of them having a shareholding. You need to take stock of that and also distribute that value based on who is going to take over what. If you see the next slide with regard to how the distribution can happen, you have the business A vertical, which is going to get taken over by Mr. A, and then Mr. B is going to take over the vertical 2. If you observe the value between the two enterprises, the current day valuation, not the potential valuation, the current day valuation that you envisage for it, you would have arrived at 1500 and 1100. This again creates another delta which needs to be made good between both of them. So what would necessarily happen is that Mr. Hayes' family will have to release certain assets or make certain cash settlement or provide an immovable property, any other manner that is provided in order to ensure that family, Mr. B and family are made good of the 250 crore difference. So this is quite essential. And that's why I said valuation is an important aspect that needs to be a starting point for most of the conversation on a family arrangement. Because most of the requirements or most of the conversations would hover around what is the value they got and what is the sort of control that they get over the enterprise. Moving forward, there can also be a situation where you will have to acknowledge certain people's capability and what is the contribution that they have to bring in. So this would result in what is called as a fair distribution and may not be an equal distribution. For example, in this particular case that we are seeing, we have case of once Mr. A's son has joined, we have seen a substantial growth in the business value, which means the ability of Mr. A's child to actually bring about the growth is much higher. So you need to compensate them or provide a mechanism where they are also benefited for whatever contribution they are made, they have to be made good. So that's why I said not an equal, but it has to be a fair and equitable distribution, whereby they might actually get a certain higher percentage in the asset that they are trying to manage. So this is one of a metric that we need to consider. Now we'll move on. This is the aspect of family arrangement. Now, when you have a concept of legacy businesses that are being built, we have common principles across all businesses that are under that particular group. Like we have an instance of GMR Group, we have the instance of TVS, we have the instance of Reliance Group, where they are into multiple business segments. When these segments are involved, it is important to have what is called as a family constitution. That is how each of the family members carry themselves, how what is their roles and responsibilities, how they have to position themselves when they are representing the families, what is the common ethic and what are the principles for building any business under this particular name. So these are some of the aspects that are considered as part of family constitution. I would like to call upon Mr. Ramohan to share his view, because he was essentially a part of creation of this family constitution document. Sir, if you can throw some light on how it is built and what are the underlying principles for creation of a family constitution.
Yeah, Maitri, thanks for bringing me in here. The family constitution, as I said, was built over a period of more than 10 years. That was the time that the family took to put that document together. And over that period, of course, there was a lot of changes in the family. New members came in, meaning there was marriage into the family. And each and every one of them was involved in that process of making out the constitution. And every aspect of life was thought of and documented how exactly they would deal with uh, for their day-to-day living itself. One major thread which flowed through the whole thing was that the family should remain together. That was the basic fundamental criteria which was followed. And a principle that has been brought in and which has been adhered to is a family vacation year. That is part of the constitution. Every year, all family members would get together and go to a spot as on vacation, um, spend about a week to 10 days there. That was a bonding, and that was how they felt that they could build themselves as a single unit. Then another get together was always a single festival. Getting together on a single festival was again made compulsory. The entire family would get together, and that was to build the tradition, carry forward the tradition, and also invite uh, the generosity into them. They view the society, how they help nurture the people around them. All that was built into the family. So the constitution describes that, describes what sort of lifestyle each of them would have, the sort of education which would be given, and how each family member would be involved in that. Uh, this whole thing was debated, recorded, discussed, and documented. So all ladies were involved in the discussions, and over a period of, as I said, more than 10 years it took to fully subscribe and bring it to a conclusion. And the whole thing was documented and signed by all the existing family members. And it was agreed that going forward, each member uh, would agree to be part of this constitution. So, though, of course, it is not a legal document, but it is something which the family believes in, and that is driven by the main patriarch. As long as he is there, he is the controlling authority, and his authority and control over the rest of the people have been accepted. And the fact that going forward, various generations, as they come in. I mean, all children are made part of the family since the get together. The continuity is maintained. It is not that the new generation would feel alienated. That continuity is being maintained by their regular get togethers and bonding, which they believe in.
Thank you, sir. That was very, very insightful. It is almost like a holding Bible for all of them as to how to carry themselves in future.
Exactly. Exactly.
Um, Going forward, we'll have a small poll question here, and I'll hand it over back to Arun.
Thanks, Maithili. Thanks for taking us through the different facets of family arrangement, and also thanks to Mr. Ramon for taking us through the facets of family constitution. So, as a next step, let's deep dive a little more into the structures, um, or exploring alternate structures for business succession. Before we do that, we'll pause for a moment for poll and then take it forward. Yeah. So going forward, see, once we understand that there are multiple businesses and different branches of families that run the businesses, and there is a call for family settlement or a clarity amongst the family members that there needs to be an understanding amongst themselves. It is all the more important as to what are the mechanics that can be used to achieve the goals or the goalposts also that are mentioned or captured as part of the family arrangement. Otherwise, it just becomes a document without any action. So, having said that, let's look at some of the aspects. In the previous slides, Maithili was also speaking about how different businesses run by the same family were segregated amongst each of the family units or smaller family units, and they were allowed to run the show on their own. So that was more from segregation of businesses so that it is clear within the family that each of them will run the show on their own with respect to the business allocated to them. But however, it is not necessary that the family settlement or estate planning or a business succession in necessarily result in distribution of business units or business entities. It can always be that they decide to continue as a whole unit, and at the same time they can allocate each of these businesses to be operated and controlled and managed separately but owned together. It is still possible, like Mr. Ramon mentioned. In GMR, they decided to be together, but there is a separate group that which will operate and make operational decisions. So this is one way of addressing. Uh, uh, it's as I mentioned, it need not be always division of business units. Sir, if I can call upon you again here, some more thoughts on being together but still managing separately. If you can throw some light
Yeah,
over.
in the previous structure that Maitli had described, where each uh, business is run by a separate family, individual family, the possibility for expansion and growth is limited. Whereas if it is consolidated and run as a group, the you can build it into an institution. That was the idea with which this group went into this structure, where you have a holding company, and that would be the controlling. This is, let's to a great extent, like the Tata's structure, where you have the Tata Sun, which is the holding company, and different companies, all differently managed, either by very rarely by the family. It is all professionally managed, but they all come under the Tata Sons group. Similarly, is what the GMR holding has been formed, and this way the control and the ownership, the economic benefit are segregated. As and on top of the holding, you have the trust. So that structure makes it very clear that each family member gets the adequate share or whatever is relevant share in the wealth of the business, and the growth of the business is taken care of by the individuals, either the family member or professionals who are brought in to run the businesses. Capability and efficiency And proficiency is what is required to run the business, and that is distinguished and separated. So even a family member to get into the leadership position has to work his or her way up to reach that position. But at the same time, the economic benefit would accrue, whether you are in the business or not. That way, it is ensured that the group can expand and grow into an institution. That was the basic philosophy.
Thank you, sir. Thanks for sharing this insights. So, if I have to understand better, it is always possible that uh, family can be together, work together, but at the same time manage their businesses of their interest separately and reap benefits from all the businesses that the family can or family is having today, and they may have it in future also. So from that perspective, we understand that family settlements need not always result in distribution of assets. Thanks for
Yeah,
those insights. Yes,
consolidation is viewed much better in terms of growth and making it into a huge empire.
understand. That's where it results in synergies. The benefits of synergies are reaped.
Exactly, exactly.
Yeah. Moving ahead, so on the same lines, how the holdings are held through a trust, a private trust or a family trust that we talk about. Of course, we will not dwell much into the trust because we have touched upon these aspects in the previous session. So these are two simple examples how the beneficial owners will be part of the ownership trust, and some of the key family members will be part of the control trust, where the control trust will also form part of the board which will run the show, operate, get into the operations and decision making activities. So this is one structure that is possible. uh, Again, it has to be looked into whether it suits every case or not. It has to be tested and then implemented. Alternatively, it can be one single trust, which where all the family members become beneficial owners, and the control is provided to the board through certain resolutions made by the trust, and the board have can have professionals as well as family members, key family members who have interest in running the show. And of course, below that is the operational activities being undertaken. So these are some of the simple structures that can be implemented using trust and a holding company structure. Moving ahead, let's quickly dwell upon the additional benefits that we can look at from having a trust structure. Of course, I'll run through this, only one or two points that are critical, which I'll take it up. Ring fencing, which we have discussed already in the previous session. Uh, Also, one important aspect here is any trust document that gets registered is a private document. It is not open for public. It is just a part of sub-registrar office, and hence, as a public, no one else can have an access to this document. That being the case, it helps in maintaining privacy as to what are the compositions of the family settlement, etc. So that way, the family can be rest assured that whatever is documented is well protected at the sub-registrar's office. At the same time, it helps to safeguard assets which are vulnerable and which need not be open for public inspection, etc. And also, due to ring fencing, it will also protect from business liabilities and risks. Of course, at the same time, we have discussed this in the past. Family trusts helps in transition to the next generation within the promoter group without triggering for any kind of SEBI actions or approvals from SEBI. In case of these are in case of listed entities. So these are additional benefits that we have observed in case of having a trust structure in place. So let's another important topic that we will want to touch upon here is requirements of a restructuring. This is also important, as I mentioned earlier. Reason is restructuring is a action item as part of a family settlement or a family arrangement. Reason is because of the way the family-run businesses have grown, let's say over a period of time, or a decade or multiple decades, there may be cross-holdings, subsidiaries, and holding companies, and there may be a lot of intercompany transactions. These all have to be the knots or the tangles has to be removed so that the resulting entities can be allocated for either ownership or for control purpose. So from that perspective, as I mentioned earlier, we have multiple options or multiple mechanics that we can implement. Of course, it has to be tested as to which are the right mechanics that can be used for considering the current situation. Let's say in some cases, demerger may be necessary. In some cases, mergers are necessary. In some cases, if there are HUFs within the family, then partition of HUF may be necessary. And if there are LLPs or partnership firms, reconstitution is one thing. Or if there are business units, multiple business units within the same entity, and if it is a limited or a private limited company, we need to look at whether demerger is good or asset transfers are good because it has its own advantages and disadvantages. So these are some of the mechanics that can be implemented or used to achieve the business restructuring, which is again necessary from family settlement aspects or the succession aspects. Moving ahead, again, we'll very briefly touch upon the tax complications that might come up as when we plan to implement the settlements or plan to implement the succession plans. So, when we look at the mergers and acquisitions, it has to go through the pre and post transaction conditions. It has to comply with the conditions that are stipulated under the tax laws so that the activities or the demergers or merger activities are tax exempt or tax neutral per se. And reconstitution of LLPs, there are new amendments to the law which talks about in case of reconstitution or even in case of dissolution of LLPs or partnership firms, it may trigger taxable tax incidents, and hence there are tax liabilities. So this has to be evaluated. And of course, asset transfers or even slum sales that may have to be looked into and analyzed whether it will suffer taxes from the provisions of the taxation. And uh, though the definition of the family is wider under different laws, it is somewhat narrow in from the definition of family with respect to the income tax, and all the more narrower when we look at from Companies Act, in fact. So it is all the more important that these aspects also has to be analyzed. While tax is not the primary focus or the key driver for the family settlement, while it is the clarity and the distribution or the ownership, segregation of ownership and delinking of the control, while those are the key drivers, tax need not be the key driver, but at the same time, it cannot be neglected. It is like last but not the least. So it is all the more important that these aspects are looked into. And of course, valuation requirements may kick in wherever necessary. And from capital gains taxation perspective, the cost of acquisitions, etc., some of the rules and the some of the aspects of taxation needs to be looked into. So now that we have covered almost majority of the slides, we will just quickly run through few more aspects. Just a moment. Yeah. So at this point in time, while we have talked about all the key aspects of business succession, key aspects and the requirements of family settlements and different aspects of the action items, that is the family settlement being mergers, different mechanics, and also the tax consideration that anyone should have in place before finalizing the settlements or the succession plan. While we have understood all these things, we would also want to touch upon our product, which is called My Legacy. Uh, this is a product that we have started offering to the families who run businesses. It's a product, and then how this is what we My Legacy product helps in addressing the situations within the families to achieve their goals or expectation, to achieve their expectations. So what is that My Legacy all about? So we look at holistic planning, we consider family dynamics, legal frameworks, the businesses involved, and the individuals being part of the families. We analyze what are the kind of legal structures that needs to be put in place. It can be trusts, corporate arrangements, and other legal structures, including family settlements, deeds. And we also discuss with the families as to how the control and governance aspects needs to be addressed as part of the settlements, while the wealth distribution and control mechanism to be handled carefully, which will, in turn give rise to the decision making, and also the conflict management within the family for the business purposes. Today, of course, there is a news in the recent past about how there is a tussle between two groups within Tata Trust. But of course, we will not dwell much into it. It is just a news without much information out in the public. But those are, though, what I'm wanted to stress upon here is, though it is a well managed and well documented and been in place for so many years, the Tata Trust, in they are also not they also have to go through this stress once in a while. And I think the documents which gets well drafted should address these situations also. And of course, proactively, the Anveshan way is how it can implement management of business and interpersonal matters impacting the succession proactively. This has to be in discussion with the families. And of course, last but not the least, succession in family businesses and personal assets. So we always emphasize that succession planning today is not one size fits all aspect, and hence it's a process in itself. It involves customized dynamic structures. When I say dynamic, what may hold good today may not in necessarily be fitting after 10 years. That means it has to be relooked again, because the next generation may be ready to take over the businesses. Hence, this is an affair that is a continuous continuous thing, and hence it has to be, we all needs to be aware of this matter. And of course, while all these things are addressed objectively, uh, um, the importance to each key member has to be provided, so that no one feels that they are left behind or not addressed, their concerns are not addressed. So this is how the Anveshan way that we take up family succession, or I mean business succession. So what does the My Legacy stands for? It's an acronym. It is nothing but leadership and estate guidance and asset custody for you. So we always want to say secure today, protect tomorrow, across generations. So this is a QR code, where we have created a self-assessment questionnaire. Request you to scan this and go through the assessment. It may help you in identifying where you stand in terms of the business succession or the legacy planning. And this may open up some new ideas, new thought process within the family. Yeah. So this is, I hope you have done the scan. Of course, we will be sending you the presentation also, which you can use it, or at the same time, we'll be putting across these product details on our website, anvishan.com. You can certainly take it up from there. Just a minute. The battery is low. Just a minute. Yeah. Yeah. So I think this with this we would want to end the presentation with respect to the web session, and this is about us, briefly about us. We have a small poll coming up. I request you to uh, take a moment and then answer our poll. Uh, Post that, we will open up the session for Q&A. Let me go back to the previous slide so that the QR code is still visible for a moment. Okay, thanks for addressing the poll. Let's open up the session for Q&A. Maithili, would you like to lead the Q&A session?
One second, Arun.
Yeah.
Probably I need a bit of help.
Yeah. So, if I could request the attendees, if they have any questions, please raise your hand and then we will unmute and you can ask your questions. At the same time, let me see if there are any questions in the chat.
So we have one question with regard to there's one trust holding all the subsidiary companies. How is the share of the beneficiary split among the family members? All the members will be beneficiaries of the trust, but how is the percentage of holding legally crystallized? So typically the trust is the front face, but economic benefits are moved on to the beneficiary. So if you have to actually see why generally people have a trust structure is so that there is not too many interferences from all family members, and the person who is having operational control sits as the trustee, and if there is any dividend or any benefit that is getting moved to the trust, it gets divided among all beneficiaries. Now, the only way they can, um, they are indirectly holding shares, but the only way that they can actually enforce any sort of control over the entity is if you require to be not part of the trust and require a settlement from as a beneficiary, you move out and you expect a carve out of your share from them, and then only you can control it. Otherwise, the trust document will clearly define the mechanism. So you can call yourself an indirect beneficiary of such and such shares, but you would be only benefited for the economic benefits and not the operational control. As a beneficiary, you're under a trust, you can only enjoy. You can't control trust. The trustee is the one who has absolute control. So you can't have sort of an legal control over the subsidiary. So you can have only the benefits of the subsidiary that you're holding through the trust.
I think you can unmute and then ask your questions. Mic is enabled for all the members. Of course, this is a heavy topic. There are a lot of nitty-gritties, and generally we have observed that the process of estate planning and business succession runs into months and sometimes years also. So it's a heavy topic, heavy activity. At the same time, if you have any questions for us or for Mr. Rammohan also.
Hi, this is Vishal Jain here. Uh, I have a question related to succession planning. So, my daughter has recently joined the business and she studied in MIT. So, how do we work out a compensation package for her? Because she's joined the business just now and her starting point is MIT graduates all over the world are getting $200,000. And we, coming from a traditional Indian family, our remuneration starts from 1 lakh, 2 lakh, like that range. So the gap is pretty wide. Can you throw some light on what your experience has been on how to fix remunerations for the kid? Because my goal is to motivate her at the same time, not to give her so much that she's not self-driven anymore or not motivated anymore. So how do I find a balance in that? Thanks a lot.
Very
Okay, first
interesting.
of all, Arun,
Yeah,
Ramon sir, and Maithili, thanks a lot for this fantastic session. Really kudos for you guys to pull this off. So thank you so much for this.
thank you. Thank you for your kind words, Mr. Vishal.
Thank you.
And certainly, I mean, there is no right answer, one right answer. There may be multiple answers. First, you mentioned it is your daughter, and she's also from MIT, graduated from MIT. That adds to the complications. So to sort it, you can always, like Mr. Rammohan sir was mentioning, the economic benefits of any business being part of the family is certain. There is a certainty. That means it is already there, whether the person is participating in the business or not. At the same time, to control the business, to run the show, the person needs to be trained or groomed for some time at least, depending on the nitty-gritties of the business or the kind of business that you are running. So the person may have to run up, go up the ladder right from the scratch. And I think I remember even Mr. Tata also was saying that for a person to successfully manage the business, he should get onto the floor, shop floor. That is when they'll be able to relate to the business and then be successful in running the show. So, coming to the remuneration part, certainly it's no one's guess. At the same time, the remuneration that you intend to pay need not be for the graduate for the qualification, but for the kind of work the person would be interested or person is involved in. At the same time, you'll have to show the roadmap as to what is that um, milestones that she has to achieve, and she will be in next, let's say, 5 year tenure or something like that. But um, Mr. Rammohan sir, if you can throw
Yeah,
some more
I
light here based on your
just
experience.
like to add here. Maybe as a start, she can test her marketability. For a year, maybe she can look out and work in a similar industry. Let's see what is the sort of salary that she can get if she goes into the market. That will also give her an exposure to the industry and help her to gain some understanding of how things work. And then after a year, maybe you can bring her back to your company um, uh, at par or with her higher salary. And as we have said earlier, it should not deter her from the economic benefits that will come. Not as compensation for her work, but as a part of the ownership, which is different. So to fix a salary, let her test the market. For a year, work somewhere else, similar industry, similar position, and see what is it that she can. It will be an added advantage as an experience.
Yeah,
Thank you
Mr.
so
Vishal,
much. Thanks a lot.
yeah, hope this gives some guidance, but may not be a complete answer, perfect answer, because as I said, it is no answer can be right here or no answer can be wrong. Yeah, moving ahead, the next question I think Vanita is asking, when it is handed over to professionals, professionals enjoy the benefits and control will be held back with owners. Just to clarify, Vanita, see, when generally the professionals are brought in, that is from outside, only when uh, the promoters feel the need for having the professionals in place. That is, there may be different reasons, either because the family doesn't have enough expertise or professional skill set to run the show, or there may be multiple businesses and hence and the number of people within the family are not enough to take care of the businesses, hence professionals are brought in. So professionals, when they are brought in, they will certainly enjoy the benefits in terms of remuneration and stock options or etc., as any other employee would enjoy. But the control, when I say control, control will still be handed over to the board, and the CEOs or CXOs are empowered to make decisions and take decisions. At the same time, the ownership will vest with the board and sorry, with the trust. So this is how generally the ownership and controls are dealing. Hope I could answer your question. Maithili, you want to take this up? There's a question from Mr. Shankar Shastri. The decisions mostly went on family business succession plan. Are there any guidance precautions for a professionally managed company where there are multiple professionals owning the company as a group, that is guidance for them to be ready for any future transaction, buy or sell businesses, in addition to the due diligence which normally happens at the time of transactions? See, if I understand this correctly, when you mentioned it is professionally managed company and they also own as a group. So one example that comes to me is Shriram Group, which is completely professionally run, and there are multiple stakeholders. There are institutions which are holding stake in Shriram Group, and it is completely run by professionals. The promoter have moved out already. So there, the board has the decision-making authority. At the same time, there are certain reserved matters which goes to the shareholders and they do the voting like any other AGM or EGM gets conducted, and then the resolutions are passed. So in such situations, for any kind of buy or sell businesses or any key decisions that the board has to do, if they are listed as reserved matters, it certainly or invariably goes to the shareholders for voting. This is how I believe the professionally run businesses operate. Hope we answered your question. Mr. Devendra, certainly we will share the presentation of 1 and 2. And also we have put our recording for session 1 on YouTube. It is already available. If you can look up for Anveshan as a channel in YouTube. All our past webinars are available, but certainly we will send it across to you, the link along with the presentation. Yeah, the next question is from Ms. Subhashri. She mentions this question is related to the previous session. In case a married couple is heading for divorce, can one party transfer their assets into a private trust at that point in time? Will the asset transferred into the trust be included for alimony computation? This is a very interesting question. If you are doing any of this kind of activity owing to any kind of separation, and if it is evident by if it is identified that it has all been done only for the purpose of avoiding from getting into alimony computation, then certainly courts will neglect such transfers and will be considered for the purpose of alimony. So, as a precautionary measure, even before any kind of separation is sensed, any kind of separation is observed, it is all the more important for the families to move their critical wealth into the trust, just to overcome any kind of situations of this sort. But if it is done during the process of separation, certainly it will be struck down. And generally, there is this time limitation which says that 2 or 3 years is considered. Of course, legally, we need to look at what is the timelines provided by the legal framework. I think it is 2 to 3 years. So before anything starts, 2 years ahead, if these things have been done, you can always argue in the court of law that it is not done to overcome from these aspects, but it was in good intention, it was done.
Uh, yeah, this question where they had done with regard to how to approach this topic with families. So that is one place where we as advisors, we observe them manage businesses. We are aware of what is there. The beauty of it is we are not in the problem, we are outside the problem, so we can give a very objective observation to them. And as part of the Anveshan approach, we actually identified multiple businesses who have been with us for a very long time. We sort of preempt these kind of situations that can come up. We actually tell them at different point in time, saying that this is something that you need to consider doing. If not today, it is going to come and knock at your door at some other point in time where you need to address this. Why not start your first steps towards that? Is something that we preempt. So only we as advisors, we will be able to fit into the shoe and ask them those kind of right questions. And I think we also have a responsibility as professionals to do that, because being in the problem, they will never anticipate it. We have multiple cases where we have sort of nudged the promoters to go from even a partnership to an LLP, because the liability is always ensuing in a partnership. It is always an unlimited liability. So when you have a broader question of only the business under control, first you need to ensure the liability is limited, just to ensure you're ring fenced. Then you start a conversation of, okay, we have a lot of people. How do you manage it? Have you thought about what needs to be done? So you create the awareness at different point in time. It's a slow nudge and it happens over a period of time. It is not a one day wonder.
Yeah, just to add to that, at the same time, it also depends on what kind of the person, the client is, whether they are power centric or tough person, or they're open for ideas, they're open for conversation. Only the professionals or the advisors would be able to analyze this and then make an approach. But see, whatever said and done, it is all in the interest of that person and the family that we are doing and nothing else. So we can always envisage or visualize whether they are getting into trouble in future, and hence how do we overcome that? So it is not for us, it is for them. With this thought, if you approach, certainly they will also appreciate. Any more questions for us? Mr. Shankar, this I think we'll take it offline on the matters precaution that you mentioned that is outside this business succession aspects. There is a follow-on question from Ms. Neha Maithili, want to address.
And secondly, when businesses are run as a sole proprietor and partnership.
So the when the businesses are run as sole proprietor or partnership, you'll have to identify within the family, are there any
Yes.
majors who can step in as partners, so that the proprietary concern or even partnership can sail through in case of any kind of eventualities at promoter level, so that the business continuity is established. So one option for proprietary concern is convert it into a partnership or even a private limited company. At the same time, you can also move the business as a through a slum sale or asset transfer into a new entity that you form, and then you bring in other family members so that the continuity is not hampered. At the same time, partnership, bring in more partners so that you, in case of eventuality, you at least have two partners post such eventuality.
And also the concept of what you envisage for that business, the promoter will have to consider. Is it that you want it to be held in the family for a longer? Who's going to take it over? Do you want to take it on a professional side where you want to raise investments in that business? All those aspects will, nuances will actually creep up for us to weigh all the requirements and then do an advisory based on that. So one is as what Arun said, you have to do a BTA, or the other one is that you convert it into a partnership so that continuity is ensured. Because some of them, the next generation is not interested, then they want to consider selling the business. So those are also aspects of it. But whether have you weighed the pros and cons of continuing and who is going to continue? That is, will be the decision will hinge on that particular question being answered.
Yeah, we have some more time, but if there are no questions, we'll wait for a couple of minutes. If there are no questions, then we can end the session. Okay, so I think there are no more questions. I think in case if there are any questions, follow-on questions on this aspect, you're always welcome to write to us, and we'll be happy to address these questions. Um, Please feel free to approach us at any point in time for any matter of that sort, and we'll be happy to take it up. And on this session, we have recorded, we'll be sharing this recording with you all over an email, and we'll be uploading the recording on YouTube. We'll share the presentation also. And we are also looking at should there be any third session on this matter. There are certain nuances which we will internally discuss and then come up with dates for next webinar, which we will be communicating to all of you. Thanks a lot. Thank you all once again for making this a success, and taking your time out And thanks a lot once again from heartfelt gratitude to you all.
Thank
Thank
you all.
you,
And
Ram. Yeah.
one additional call out for the team who have actually helped put the presentation together, Nidhi and Alok, who have worked together for putting this and enabling the whole session. Thank you so much. And Vijay Sama for the support that he is, as usual, provides. Thank you so much for that. Thank you, Ramohan sir.
Thank you, Ramon sir, and thanks, Maithili. And thanks to the team who have been working towards this session and making it success. Thank you.